Welcome to the Futures Edge podcast. I'm Jim Urio, as always, assistant to nobody, assistant to nobody, executive producer, brains behind the operation, co-host, Bob Acino. Today we have a friend of ours, founder of the AI firm Complete Intelligence, Tony Nash, also has a kick-ass podcast that I was fortunate enough to be on and really enjoyed the conversation called The Week Ahead. And you do it generally with Tracy and with Albert, correct?
Yeah, quite a lot we do it. Probably 2/3 of the time it's with Tracy and Albert.
Yeah, good.
Thank you for that, by the way. I really appreciate that, Jim.
Oh, no, I loved it. I loved it. So okay, first of all, let's get the nonsense out of the way. What's your favorite drink?
Oh, coffee.
No. You don't
That's
drink
not what he
alcohol?
meant.
Tell me.
No, coffee. Coffee is it. I roast
I love
coffee.
coffee,
I
by
post
the
about
way.
coffee. Coffee is my favorite drink.
Well, you are
Okay.
a fucking nerd, dude.
Yeah, I am. Yeah.
By the way, coffee, I think if I had to quit either coffee or booze, I think booze would be harder, but I think coffee would be damn close. I think coffee is something that I live on. So,
Coffee would be harder for me. Much harder.
really, yeah. How many
Yeah.
cups a day do you drink, Tony?
Probably 4.
Yeah. Okay. I drink about 4 cups a day too. Did you guys, I was about to ask you what your favorite show that you watched recently was. Have you guys seen the show Shrinking with Harrison Ford and Jason Segel?
No.
Oh, that's your assignment for the week. It's pretty damn funny. Harrison Ford in a comedic role. It was really interesting and he killed it, I thought. Yeah.
Really?
Can
It's
I throw-
dialogue.
Can I throw something out here before Tony
Sure.
tells us his favorite show? Is it a cliche that I love Sylvester Stallone and Tulsa King? Is that a cliche?
Yeah.
Oh, yeah. It's a Dago cliche. It's the
I'm
worst kind of cliche.
stereotyping myself, right? Is that what I'm doing?
Oh, yeah.
Definitely.
No doubt about it.
A mobster now in Tulsa, Oklahoma. I'm down here in Southwest Florida. It's pretty well.
Yeah.
Tony, before you answer the question, speaking of mobsters, you got to read the Bill O'Reilly book, Killing the Mob, particularly if you're
Okay.
from Chicago. It was amazing. Did you read it, Tony?
I did not. No.
It was great.
But
We got to shut up and let him answer questions.
staying on
what's
the mob, the best show that I've seen over the past year, it was on Paramount Plus, and it's about the making of The Godfather. I can't remember the name of it, but it was
The Offer. It's called The Offer.
The Offer. Yeah, it was fantastic. Really, really
Okay,
good
I want to
series.
watch that, particularly because they talk in Bill O'Reilly's book. They talk a lot about, Sidney Korshak was basically the biggest guy in the mob. He was in L.A. and he was the mob accountant for all the outfits. So
Okay.
he was the fixer, they called him, and he's the one who hired David Evans, who made The Godfather, right? And the mafia hated it at first, and
Yep.
then they loved it after it was made, which is so funny. And started adopting some of the traditions that were brought back from the movie The Godfather, like
They
the
talk
kiss.
through some of that in this movie about how they negotiated with the mob to allow the movie to be made. It was really well done.
Yeah.
Actually, if you guys want to read something good called Family Secrets,
Okay.
and Jimmy, since you're a restaurateur and you're both very familiar with the Chicagoland area, you will recognize 90% of the restaurants, places that they mentioned in that book, because it's all about the Chicago outfit and the Calabrese brothers and the Kid and all that. It's fantastic.
That's awesome. What was the name of the mob joint in Norridge or Norwood Park? It was an Italian restaurant that was all like my buddy who worked for the state's attorney. They had files on these mob guys and they had like hangouts, and it was the same restaurant. I used to go there occasionally. You guys don't remember the name of it?
You talking about Capri or Sicily restaurant?
No, neither of those sound familiar. I know if you said it, I'd know it, but it was so funny because now, like, there's a place in Arlington Heights now, which I think is a bunch of mob wannabes. It's like a bunch of 80-year-old. Maybe they were back in time, but it's a pretty funny place called Palm Court. We go there and they have like a guy singing Lou Rawls and Dean Martin and a bunch of old Dagos dancing. It's fantastic. Okay, let's get to Tony, by the way. Right? Remember, Tony's here. We have his brain, his knowledge, and we can talk about mob shit the whole time. So we had a series of numbers over the last week that are beginning to suggest some level of stagflation. My opinion is until it strengthens the labor market is obviously not part of stagflation. Is it too early to start worrying about it, Tony? What are your thoughts?
I think it is. I think, you saw some really strong reports, quarterly reports this past week. I think banking is not as bad as people had feared. There's some strength in tech. You see some of the services company, restaurants, and even some of the consumer goods companies that are still reporting price hikes. So, the price hikes would be inflation, but there is very small slowdown in their volume. right? And so they're still growing the top line. And so it's not as if people can't buy because they can't afford it. You're also seeing service wages, especially in the middle of the country, still be very strong. And so, people in the middle of the country are making more money and they're spending it, right? And what's also happening is you saw, I think, 8 or 9% rise in Social Security earlier this year. And so, you have a bunch of old people, they're not saving the money, right? They got a 9% pay rise and they're going out and spending it. So, we do have more money coming in. I don't necessarily see that we're kind of entering a recession. I do think that we're going to have a slower Q2 and a slower Q3. Our forecasts indicate that we'll see kind of a 0.2, 0.3 growth rate in those quarters, and then we'll tick back up in Q4. So we have a lot of economists talk about, well, we're going to have a recession in the back half. I don't think it's the back half. I think it's the middle part of the year that we should really worry about. And when we get to the last quarter, I think we're going to be in much better shape.
Okay, now the stock market seems to be relatively buoyant. I point to the fact, $7 trillion was injected into the economy over a relatively short amount of time. But there's something to me that looks kind of ominous. If you look at the Russell compared to the NASDAQ, or let's just say if you did equal weighted in the S&P, it'd be down for the year, but cap weighted is up for the year, meaning, the big companies people are buying their shares. To me, it almost kind of smacks of flight to quality. Do you think that I'm reading too much into it or no?
No, I don't necessarily think you're like flight to quality right now as people are spooked. It's a natural thing to do, right? And you have the Fed start to dial down on or start to increase the rate of QT up until the banking scare a month ago. And so, some of that money was being taken off the table and other things. So I think as that money is taken off the table, people want to move to quality because the smaller companies, they're just not sure about. But I think what we're seeing in some of these earnings that there are some companies that are actually doing okay. People have kind of figured some of this stuff out. They're getting more efficient with staff, especially in tech. They're getting more efficient with staff, and they're really learning how to pass their costs on to their customers.
Bobby, got anything?
Yeah, so I want to push back a little bit on the stagflation thing, which you might have guessed. Tony tweeted today, Jimmy, we tagged you in it. I don't know if you got a chance to see it, but Tony said, with the strong earnings, are we still talking about stagflation? And I jumped in with a yup. And I said, okay, let's talk about that. And then, Jimmy, I actually have a question for you, because one of our members on the Path Trading Partners YouTube asked a question and asked me to ask you. So when you give me an opportunity to do that, I will. So I maintain that stagflation is the worst possible economic situation. Some people, like Charles Payne from Fox News, thinks deflation is worse than stagflation. I can understand that argument. It's kind of tougher to get out of. The stagflation argument, to me, sort of plays out like this. We had GDP go from 2.6% to 1.1%. So therein is a slowing economy, still growth, actually still respectable versus the last 20 years, right, guys? But versus the last 20 years, I wouldn't call it generally respectable. And then you had both PCE numbers surprise to the upside in some forms. Now, I would argue, and Jimmy's been correct about this, the supply chain part of the inflation has virtually gone away, but the wage part is still biting. And that's where we saw in the ECI numbers, the employment cost index numbers, also surprised to the upside. So my fear is this, and one of the things I said to our members is, you guys stop spending because the economy is slowing down. I really don't want stagflation to happen. Okay, quit our service, do whatever you have to do. Just stop spending, right? Well, some of the things like wages.
You're not a great salesman.
I know I'm awful.
Yeah, not good, right?
I am awful at this shit. Anyway, some of the things, in terms of the wage growth and the increased Social Security stuff, to me, smack a little bit inflationary. And it bothers me because when you look at the labor numbers, which is what a lot of economists and analysts and guys we had on the show point to as the strong part of the economy, every Fed hike cycle has ended in a recession except 1994. And every single time after the recession started, the unemployment rate rose by a lot and fast, but it was after the recession started. So my fear is that I think where we get lost in the argument is, are we in a recession now? No. Are we going into one? I think yes. So where am I crazy?
Well, I don't think you're necessarily crazy. I think there is not 0% chance of a recession. There is not 0% chance of stagflation. So, everything I say is just kind of, and we all have recency bias whenever we analyze generally, right? And so, I think what Jim said is we had $7 trillion or $8 trillion pushed into markets very quickly, right? Okay, and so that's the sugar high that we saw particularly in 21, right? And we kind of weaned off it a little bit in 22, and right now we're facing those hard trade-offs, right? But with that much money pushed into the market and the supply chain constraints we saw from COVID, we saw goods inflation just rocket ship, right?
Right.
And then what happened? People couldn't necessarily buy all the stuff they wanted to buy, so they demanded higher wages. So there's a delay between goods inflation and wage inflation, right? And so now that goods inflation has generally subsided, wage inflation, there's going to be a lag because we saw, Walmart give that big raise to all their staff in January, and then that kind of cascaded to everyone else. And we saw Social Security and all these different wage rises come around. It's going to take a while for that to cascade through. And then will we completely normalize? It depends on how we normalize. Is normalizing back to 2019 levels? Unfortunately, I don't think we're going to do that right now without serious economic damage. So I think all we're looking for is some sort of balance point, okay, where we have this kind of sugar in the economy that has kind of diffused through the economy, right? It's had all of its effects on the cost of goods and wages, and now that it's diffused through the economy, we have to start figuring how to normalize. How do we take it out, right? And we have to be really careful about that with higher wages. So will wages get high to a point where people start coming into the economy, people who haven't been in the economy for a while, right? Because in 2020, we saw a lot of people check out of the economy. But we also have baby boomers who are retiring at an accelerating rate. So, we may have a point where we have people who are out for either voluntary reasons, or maybe they're don't necessarily have the best skills or something like that. We may see people come back into the economy that might put downward pressure on wages. But I think it's going to be maybe a year before we start to see that. We've really got to see wages continue to rise.
I think you definitely make a compelling case that this could be different, that there could be a soft landing built into here. I hadn't thought of it from a perspective, even though Jimmy has said it over and over again, but I tune him out. I hadn't thought of it from a perspective of, okay, so the sugar high is out now, and there's actually time to normalize the rate rises with the price rises where it can actually calm down. And by the way, to your point, Tony, people who say there's never been a soft landing are wrong. I mean, 1994, the Fed did engineer, quote unquote, a soft landing. It did happen. So,
yeah, but I mean, I think it's going to be a hard landing for some people, for those people who've been laid off from tech companies or whatever, right? It's already been a hard landing for them, right? And so it just depends on how broad that hard landing is, right? And so, can those guys get other jobs? Maybe. Is it going to be $300,000 a year checking in for 2 hours a day? Probably not. But, will they be able to get other jobs? That'll soften their landing. So it depends on how broad that landing is. I remember in the early 90s, there was a recession that nobody else talks about anymore. Okay. My parents were both laid off from their job. Actually, they weren't laid off from their job. They were at a company, both worked for the same company, where every 3 months they had to re-interview for their same job. Okay. Jesus. And so they had kind of this rolling rehiring within the company. It was terrifying for them, right? That you couldn't make long-term plans. You couldn't, but at that point in that recession, employment in places like New Jersey was 18%. Okay. So again, we talk about the 2000 recession, we talk about 2008, but 1991 was really bad. Yeah. And they had to re-interview every 3 months. And that lasted, I think, 2 years or something like that.
Wow.
And so
that's
we're
awful.
not there right now. Like everyone is kind of complaining about having to end work from home or whatever, and complaining about not getting whatever kind of benefits with their job rather than just having a job, period, right? So we still have so much workforce demand, so much like lack of supply, that I don't think we're anywhere near how difficult things were in 1991. And until we get there, I really don't think we see a really hard landing. And again, it's a relative kind of perception. The smallest hiccup will be portrayed in media as a hard landing because somebody's having a hard day. And it sucks. It sucks for them. And I'm really sorry that people have to go through this. But, it's all relative. And we really haven't seen a hard landing for at least a decade. I mean, 2009 would be the last time.
So tell me this, Tony, because you look at, and I like what you're saying here. I'm not convinced of soft landing yet, but I like the word you're saying. The money supply, M2 money supply. There's been 4 times in history, independent of this one, that the M2 money supply contracted by more than 2%. 3 of those times was a depression, 1870, 1920, 1929. The 4th time, I think, was a panic of some sort in like the 1890s. Right now, our M2 money supply has come down 2.5%, more than 2.5%. Why is it different this time? I have an answer. I'm curious what your answer is, because I have an answer too, that it is different. Why do you think it's different?
Well, I think it's different because a lot of that was one-time government spending. And so people understood that PPP was one time. People understood a lot of these payouts were kind of one-time payouts. And so, it's like, okay, let's back up the truck, take the handout. We took PPE in my company, and I'm not embarrassed about it at all because
not even the slightest. I wish I had more.
And so, we took the PPP and we knew that it was one time, right? And so you take it, you survive, and then you live to continue the business or continue a household or whatever. So I think people are mentally prepared for the fact that this government spending was a one-time deal.
Right. That's my opinion as well, by the way, too. I thought the fact that we injected the 7 trillion, 8 trillion, whatever we're talking about here, to expect a little bit of a mean reversion, I think, is relatively reasonable. So I do genuinely believe it's different this time. And I'm not saying I think a soft landing, because I do think there's a bifurcation in the economic condition. I think there was a big wealth transfer of that money we were talking about. A lot of it went to the higher end. I think people are struggling on the lower end. Tyson Foods just announced a 10% reduction of workforce. So this is different now than tech companies that were bloated and hired a shit ton of people over 2 years. Tyson Foods didn't hire people. So I like what you're saying about the soft landing. Is there any, you can justify those things and still see those layoffs coming and think it's going to be okay?
Yeah, I think, here's where it's going to be different, okay? It's going to be different over the next 2 years with white-collar jobs, okay? And this is where kind of you roll your eyes and go, okay, he's going to start talking about AI. But I think we will really start to see a reduction of white-collar jobs because of technology. It's not going to happen immediately. It started a little bit, but I think we don't really start to get traction on there for probably 2 years, okay? So when we see Tyson Foods cut jobs, that's different. Maybe part of that is automation, part of that is demand induced. But we'll really start to see your finance people, your accounting people, your marketing people, people who make really good money, are educated, but let's say they live their whole day or a good portion of their day in Excel, okay? Anything that any of us do in Excel can be automated, anything, okay? And so these jobs where people went to school, say in the 90s or 2000s and got an MBA, got a corporate job, all that stuff, what we're going to start seeing in 2-3 years' time is initially there will be augmentation, okay, of their jobs using AI, ML, whatever you want to call it, okay? Over time, what management and boards will realize is that a lot of the time that these white-collar professionals are spending are on relatively mundane tasks, okay? And so they can't necessarily be outsourced somewhere because it's sensitive information, okay? But they're repeatable, mundane tasks. And ask anybody who's white collar. If they're really honest with you, they'll tell you, a good portion of their job is kind of routine, boring stuff, right? Not just in meetings on the phone. It's kind of reports they have to make or data they have to analyze or things that have to be written or whatever, right? And so we'll start to see some of those structural adjustments in white collar jobs in a couple of years' time. That's when we'll hear a lot of screaming and a lot of pain from that class of worker that we haven't really heard that from in a couple decades at least, right? So, but going back to kind of the soft-ish landing, of course there will be turbulence, right? But I think it's possible that, as long as that super core inflation is persistent, the Fed doesn't really have a choice. They have to continue pulling back because that super core inflation is hitting everybody because these are services jobs, right? So everyone is hit by services jobs inflation. People who go to Walmart to shop, people who go to McDonald's, McDonald's pushed their price by almost 9%, I think, over the last quarter or last year. I mean, everyone's hit by this stuff, and it's largely on job costs and wages. So everyone is hit, and so the Fed has to move on it. So we'll see more investment in productivity. We'll see more focus on productivity because people just can't continue to be pushed on price. We're not there yet, but people just can't continue to be pushed on price. It's just unaffordable at some point.
Okay, how you mentioned AI before too, and I like a lot of things you're saying. Another, that one company, that MCD company, I'm not allowed to talk about it. My daughter may or may not be an exec at that company, but whatever. Let's not talk about that. But anyway, so how far are we from AI, where we could have seamlessly had one of us on this call be AI generated and people won't know? Are we years away from that or no?
Oh no, I don't think we're far from that. Let me give you a very tangible example of what we do. And I for your watch, I don't intend this to be a sales pitch, but this just can help you understand what's possible. Okay. So we do really boring stuff at Complete Intelligence. We're an AI company. And so what we do is we help companies to augment and automate their budgeting process and their forecasting process. Okay. So we have a customer. Their annual revenue is about $12 billion. Okay. They have on an annual basis about 400 people working on their annual budget. Okay. It takes them 3 months. So that takes them 3 months to do. It costs them maybe $6 million, $5 to $6 million to go through that process. Okay. When we worked with that company, the first time we did their budget, it took us 48 hours. Okay. We were 0.3% off of what those 400 people took 3 months to do. Okay. Now, a year later, we circled back with the finance executive who we worked with, and he said, "You guys absolutely nailed our budget number at the beginning of the year. Not only did you nail it, you did it 6 layers deep within the general ledger." Okay. The people that they have working on their budget do it 3 layers deep within their general ledger. Okay. So we're able, and these are relatively highly paid white collar professionals who are doing this stuff. Okay. And there are 400 of them. I'm not saying we would replace them, but we certainly take a huge load off of their work load for 3 months of the year. Right. And so can they do different activities? Can they do with fewer people? Those sorts of things, right? And so these are the kind of things. It's not super sexy. You're not, it's not Palantir doing CIA stuff or whatever. It's really mundane stuff that really impact the bottom line and headcount of a company, right? And so this is where I think the really interesting stuff in AI is. Is ChatGPT interesting? Yeah, absolutely. I don't have to hire an entry-level analyst anymore and have them take 6 months to come up to speed. Right? I can actually go myself into ChatGPT and have something written up that it would take 4 to 6 months for an entry-level analyst to learn how to write. It takes me 15 minutes, right? So, these things, but just to let you know, kind of when I talk about white-collar jobs in AI, starting to be augmented or automated, I'm talking about the really boring stuff that, quite honestly, people really don't like to do, right? And so we help those things those roles to be much more productive. And we help those executives to get a much more accurate view on their business.
So first of all, Tony, I don't want You're a pretty ethical, honorable guy. I was on your podcast as well, and you couldn't have been nicer or kinder. So I want you to tell people how they can get a hold of you. We have some pretty high net worth listeners.
All right. Okay.
It's not, you're not on here to pitch your company. I want you to tell people in the middle of the podcast rather than the end, where people might have kind of drifted off already, since Jim and I are so freaking boring. Where
But you
can
are boring.
people?
I'm exciting as hell. This is.
He never moves from that position in the chair. He literally sits like this all the time.
I'm AI.
You've got a long
I'm
day.
not even here right now.
He's actually AI. He's not a real person.
I
Tell
believe
people where
you.
they can reach you, Tony, before I ask you the question.
Sure. I'm on Twitter, Tony Nash Nerd, TonyNash Nerd. My
Never
email,
noticed that.
tn@completeintel.com. So, I own the nerd thing. I'm not afraid of it. I get it. But yeah, contact me. I'm happy to talk to any of your viewers.
Okay, so another thing, by the way, right now being a nerd is cool. So don't act like you're admitting something, that's embarrassing right now.
It's a flex. It's not an.
Yeah, all of a sudden it's a flex these days, where I don't know even who even made it a flex. I used to flex in front of nerds and try and scare them off.
No,
So
it's the Big Bang Theory. The Big Bang
That's what
Theory,
it is.
I
Big
think,
Bang
went
Theory,
a
for
long
sure.
way in normalizing, which I think was very interesting.
yeah,
It's
Big
a
Bang
pop
Theory.
culture thing.
So here's my question, Tony.
Good, go.
Do two things. So I actually have very recently, and I don't think there's any problem with me talking about this. I used to have to call an attorney for every little thing. And it got so ungodly expensive that I started just kind of looking for templates online. And in simple agreements, I would just write my own and take my chances. Because in a worst case scenario with a client, like we do in Pat Trading Partners, we do like boutique analysis for smaller firms. So I would just write simple documents and be like, okay, what's the worst that could happen? They don't pay me for a month. It's probably still less than I would have had to pay a lawyer to write up this document. I recently used ChatGPT 4.0 to create an easement between myself and my neighbor so that our fences could connect. That goes into perpetuity. So number one, are certain white collar managers going to be slightly timid to hire you because obviously some of the mundane tasks they do make them valuable? And number two, do you think there's a larger economic effect on white collar jobs? For example, my easement that I'm not going to be paying a lawyer for that comes with AI.
Yeah, absolutely. We see this all the time. When people realize what we can do, there's kind of that holy crap moment where people realize, oh my gosh, we have 400 people working on this stuff, and these guys can process it in 48 hours. Like, when people realize that, it's impressive, but it's kind of scary, right? And so when I think about how are you using a lawyer? You're using a lawyer to manage risk, right? And so why do you call a lawyer? Because you want someone else you can call and say, hey, that guy told me that this was the right thing to do. So you're basically outsourcing your risk to them, right? And so that they can create a document for you. In what we do, when a CFO walks out of their office and they see 50 people or 100 people, those people are effectively managing risk for them, right? And so, nobody really thinks of AI in terms of risk management, but actually those people are managing risk for a CFO, okay? And so when we do what we do, we're automating that risk element and we're making it much more consistent, right? How risky is it for you to forecast your budget for the next year, right? If you get it wrong and you give the street the wrong number or the wrong guidance or whatever, it can be really bad, right? But for everything we do, and ChatGPT and other AI tools work the same way, we have a statistical basis for everything we do. So everything we do, we tell our customers our error rates for every single line item for every month, okay? And we actually have a publicly facing platform called CI Futures that people can subscribe to see the S&P 500 stock forecasts. They can see equity markets, they can see currency forecasts, they can see commodity forecasts, and they can see global economics. It's $20 a month, so really cheap, right? But we disclose our error rates on that platform so that people can understand the risk associated with what we do, right? And so I think we have a more educated society. You have more confidence in using GPT 4.0 because you're confident in the underlying tech, the broad-based adoption of it, And the kind of statistical, although you're probably not too aware of it, the statistical underpinnings of it, right? Because all GPT is doing is going out and doing a bunch of, say, Google searches all at one time, looking at the incidence of a topic or a word, and then putting that together for you on an incidence basis, right? So you want a legal agreement for an easement, and it goes out and says, okay, legal agreement for easement. What are the words that are used in those agreements? How are they structured? And what's the incidence of the order of that stuff? And it's summarizing it up and it's putting it together for you, right? And so that's just a statistical analysis that is reducing your risk because it's looking at what most people do, right? What do most of those agreements say? And so what we're doing when we forecast, say, a supply chain cost or a expense budget or a revenue budget or something is we're looking at a lot of data. We do trillions of calculations to do this stuff. And we're telling people, you know what, statistically, this is likely what's going to happen in that very deep line item within your budget in September of 2023, something like that, right? And so they have a higher degree of confidence in what we're doing. It's faster, higher degree of confidence, and it's better, right? So, and your question about people who are nervous about it, yes, they are. And do you know what? I'm an investor in companies, in publicly traded companies. Do I want to know that they hire 5,000 people in their finance team and it could be taken down to, I don't know, 3,500? I would want to know that, right? And so is there inefficiency in these finance teams or marketing or other teams? Absolutely, right? And so, you know, so that's what this technology is doing. It's allowing investors to look at the companies they invest in and go, hey, company A, why are you not looking at this technology to deploy in your company to actually make your workers more productive? That's really what it's all about.
You're the boogeyman to a lot of middle managers, Tony. Go ahead, Jimmy.
Absolutely. Can we flip back to markets for a second? Because I do want to talk about the buoyancy in the stock market, particularly the last couple of days. I'm having a difficult time understanding it, particularly after we saw that the GDP number, which, you know, like we said earlier, showed both slowing economy and inflation that's being persistent. What do you make of it? Why do you think the market is going higher?
We had nominal GDP at 7 to 8%. I don't remember the exact number, but you know, you have a nominal GDP number that is the same as it's been for the past couple of years with all of the government stimulus. Okay. Real GDP is different, of course, because it factors in inflation, right? And so we have inflation at 5 to 6 or whatever. And so, you know, so that's discounted to 1 point whatever percent it came out at, right? And so so you're still growing nominally at the same rate you've been with all of the COVID stimulus. I think that's part of the reason that people are looking at this economy and going, yeah, we really thought that, you know, that pullback was coming. We really thought the economy was slowing, but in fact, statistically, on a nominal basis, it's still running at the same rate. If we factor in inflation, then it pulls down, then it looks like it's slowing, right? So, you know, as you deconstruct the data that come out, it's, you know, it's not really bad. And if you look at that nominal run rate and you say, okay, if we could get inflation down, then that nominal rate actually looks really good, right? And so, you know, it's possible. I'm not saying this is probable because it's not in our outlook, but it's possible that if the Fed can actually get inflation down while keeping, you know, nominal growth, maybe not at 7+, but let's say it's at 5+, then we're in amazing shape as an economy, right? Is that likely? Again, I don't think it's likely, but it's possible. So, you know, and again, here's what I always say for people with economic data, okay? And if you see me on Twitter, you know, I always say, wait for the revision. Always wait for the revision, because this first release that you see is really a bunch of government statisticians doing a best guess with very little data, actually. Okay. And so when we see retail sales, when we see CPI, when we see GDP, whatever we see, it's government statisticians basically doing a sample of a sample of a sample and getting a quick number out to us to give us an indication of what's actually happening in markets. but there's 3-4 revisions to a bunch of these numbers. So we won't know for 2 years what the GDP number really was.
That's a good takeaway, by the way, from the show, because I think that's interesting and something I don't think about quite enough. And
Nobody
and I
does.
think that
Nobody does.
Yeah, nobody does. Right.
Yep.
When you look at the how gold, Bitcoin, silver have performed so well over the last few months, put a fine point on that. How do you explain it?
I think it's just a function of the dollar coming down. I think it's kind of the reverse of that. I think it's people pushing a recession narrative and wanting to kind of look for a safe asset. And so, that's really, I think, all it is. I don't hate gold. I don't love gold. I've been in and out of gold over the past year or so, not on a regular basis, but I'm not in it now. But I think it's useful when it's useful, but it's not something that I'm looking at. I did have a crypto investment a couple of years ago. I was in Doge for like 6 weeks, and I got in at 4 cents and I got out at 76 cents. So I did okay on that, but it's a bigger sucker's market in crypto, I believe. It's not money. It's an asset. Okay. Crypto is an asset. It's not money. And so, I saw it as an opportunistic asset. I got in and out. I didn't make a huge amount of money. I just wanted to see what could happen. Did a lot better than I thought it would do. And I'm just not a huge crypto fan because I just don't see where it's going, especially when we're talking about central bank digital currencies and other things. It's just, what are you going to do? How can, if every investor in the US can't fight the Fed in their trading every day, then how is a cryptocurrency going to fight the Fed with a central bank digital currency? I just don't.
Bobby, do you agree with that? Do you think that there's no use case scenario for crypto going forward?
What bothers me about crypto, I don't think there's no use case, but I agree when Tony says it's not money. I think it could become money. But to me, it's very strange because nothing is technically money unless we get rid of income taxes, because the only thing that gives the fiat currency value is that it's an acceptable form of payment for your taxes. Otherwise, nobody would trade that paper. Why would anybody hold just pieces of paper that's backed by nothing? Which is, and Jimmy and you and I have talked about this both privately and last week. I did a WGN radio show where the guy said to me, Bitcoin is favored by drug dealers. And I said to him, I was in studio down on Michigan Avenue, and he said, favored by drug dealers. I said, pull out whatever you got in your pocket. And he pulled out a bunch of cash. I go, so's that. And so is that not backed by anything except that you can pay your taxes with it. You can't pay your taxes with Bitcoin. But I've had private arguments with people. I wish I could remember this woman's name. I watched this young woman who's a Bitcoin fan, and she was arguing with Peter Schiff, right? And she said, Bitcoin is money. And he said, no, it's not. And she said, yes, it is. No, it's not. And she said, yes, it is, because I pay people Bitcoin and they pay me in Bitcoin. And I said, okay, that's fine. Fair enough. But I just gave a 15-year-old kid a pair of Jordans I don't wear anymore to come and cut up a bunch of boxes for me and put them into my recycle bin. That doesn't make Michael Jordan's shoes money, just that he was willing to accept it to do the work, right? What makes it money is the ability for everyone, or I shouldn't say the ability, the willingness for, let's just call it the majority of the population to accept it in a transaction. We're nowhere near that.
Yeah, I want to be clear. I don't hate crypto. I don't think it's bad or anything. I'm not making a moral judgment call on it.
I didn't take it that way, Tony, by the way.
And if people want to invest in it, I really don't care. But it's changing the topic just a little bit. I'll make an analogy. It's like Argentina using the CNY for trade settlement, right? All they're going to do is 2 currency transactions when they pay in CNY, okay? Because everything in trade is either in dollars or euros, everything in international markets. So they may pay in CNY, but really they're going to be checking what the dollar value of that trade transaction is, right? You can say the same thing for crypto. Like, does your brain work in, I'm going to go buy, a banana in crypto? No, you think of it in dollars, right? Or euros or whatever, right? And so, sure, you may transact in crypto, but it's just circumvention of the dollar system, because that's what the ultimate nomination of that value is, right? And so until we start thinking about things valued in crypto, right? Until I can go to the gas station and they say, oh, this is however many Bitcoin or whatever. I have no idea what their numbering scheme is. I just don't see it as currency. I spent most of my life in Asia. I worked with a lot of currencies like Sri Lankan rupee and Vietnam dong and all that kind of stuff. Those are currencies. They're nationally traded. They're traded every day, all that stuff. So, you don't have to be the US dollar or the euro or CNY to be a currency. There are minor currencies all around the world. So why don't we trade those?
I want to outline something real quick because I got a question to you about the de-dollarization, but I want it to be known that I can hear the name of the Vietnam currency now and not snicker and laugh. So this is growth.
Congratulations.
By the way, okay.
Very good.
Anyway, so the de-dollarization thing, I did think that it was a big mistake. What the Russia, freezing assets, kind of weaponizing the financial system. I still am of the camp that I'm not particularly concerned of any sort of global de-dollarization thing. I mean, reserves are still there. They're just does not seem to be a suitable substitution. Are you on that same camp, or are you concerned?
China still pegs the CNY to the dollar every day. They announce every day what their USD CNY conversion rate is every day. Okay, so does that tell you that there's de-dollarization? I mean, and whenever people talk about CNY, I would say you do realize that the PBOC literally uses numerology to decide their interest rate. They literally use numerology. Okay.
What does that mean?
It means it has to be a pleasing number that ends in an 8. Okay. So, I'm not kidding. It's not the only factor. Okay. But it is one of their considerations. And so, you can't have a central bank that is setting their rates, whether it's a repo rate or an interest rate or whatever, using numerology. I mean, that's just not credible. And if people would look into the inner workings of the PBOC, they would understand that CNY is just not a credible international currency, regardless of what Xi Jinping wants you to believe, and regardless of what all of the kind of anti-dollar people want you to believe. It's just not practical. The other part is this Belt and Road Initiative, which is kind of more of a joke than a reality. It's all nominated in dollars. It's all nominated in dollars. A Chinese national program, so the part outside of China, I'll say, is all nominated in dollars. So if there really was a de-dollarization underway, why would the Chinese government be funding trillions of dollars of infrastructure in US dollars and not in CNY? Those loan agreements, those equity agreements, they're all in USD. So here, and by the way, I agree with you 100%. I am not particularly concerned about de-dollarization, but I'm going to push back for a tiny bit on something. Is that 6-7 years ago, I would have said the notion of a dollar collapsing was a 0.0001 percentage, and I think that's changed. I think now it's a 1% possibility, which I think is ridiculous for us to be making these moves. Poor stewardship of the currency, what we did in Russia. It's at least something to be concerned about, or you have no concern over it. What's the alternative? Like, we're all going to trust in the ECB? Like, I'm sorry, it's not the currency we want, but it's the currency we have, right?
Right.
So if you look at the Fed's behavior, so the central bank itself matters a lot. It matters more than the currency itself, okay? And so if you look at the Fed's behavior, they have meetings, they have notes, they respond to media and so on and so forth. Are they as transparent as we want them to be? No. Do they do the things we want them to do? No. Do they have a bunch of bureaucrats working with them? Yes. But when you look at other central banks on a relative basis, it's actually better, right?
Right.
So maybe Bank of England is better. Sorry, go ahead.
I tweeted something about a week ago and I said, we don't have to have a good currency. We can even have a shitty currency. We just have to have the best currency, right? That's what you're saying, right?
Yes. And so, right. And
it's that best house on a bad block thing is what it is.
Exactly right.
And I don't say this to be dismissive at all. Like, I take the dollar as the kind of US holder of value very seriously, but I'm just not sure what that other vehicle would be. Look at the structure of the European economy. It can't be the euro, right? Look at the UK and some of the policy decisions they've made. It can't be the pound. Look at China. I mean, I was talking with Michael Nicoletos about a month ago, and he was saying M2 in China, the amount of M2 issued in China is something like 3 times the value of their GDP. Okay. Now, M2 in the US is something like 90% of the value of GDP, right? So China has 3 to 4 times the amount of money in circulation compared to GDP when we make it relative to the US, right? So how can that be seen as a credible currency? They just are not managing the number of fund tickets that's in their economy, right? And then again, when you look at Japan, look at their central bank policies, look at their demographic structure. It's just the Japanese yen is just not a credible currency. So I just want to understand first of all, what is a real currency that we can use, not crypto, which is an asset, okay? And what is a central bank that we can trust that has sufficient money in circulation that is usable, And I don't know of another solution right now. Again, as an American, I don't want the dollar debased. I don't want it abused. I don't want, all that stuff. I want solid money policy, right? Have we had it for a while? Actually, we haven't, right? And so things need to change, and we need a more responsible, certainly more responsible spending in DC, and we need a more responsible Fed. But I think on a relative basis, it's kind of the best we got.
So Tony, I want to say this correctly. We have a responsible Fed, relatively speaking.
Mm-hmm.
Is that correct?
Which
guys
sucks,
agree with
by the way.
I know. Again, that's the worst house. What is that? The best house in a bed? I don't know. They suck.
Whatever it is, yeah.
But they're the best one out there. So from a perspective of that, you think a soft landing is possible. Stop me anywhere where I misrepresent you, okay? You think a soft landing is possible. Am I wrong on that?
I'll say uncomfortably soft landing, because we're going to have chop at points, right? So yeah, we can have an uncomfortably soft landing.
So I have come around to the idea that the Fed might be cutting rates. I don't think this year. The CME Fed Watch Tool has the first rate cut pricing in September. If things are okay, and I want to make this statement, yeah. And see, so if things are okay, why the hell would they do that? And this is why, like, there seems to be this sort of mismatch between what people are trading. And I want to stress, the equity markets is not GDP. The economy is not stocks, right? There's been several times in history, well, not several, but there have been times in history, 73, 74 in the US, where GDP was strong and stocks were negative. Same thing with Japan in the 90s. They had good GDP, but their stock market couldn't recover. So these things are detached. They're not as correlated as people think. But if we actually have good earnings, which no one can argue, we had good tech earnings, right? We have terrible market breadth still, but we had good tech earnings, may continue next week. We have 709 companies reporting next week with market caps.
Exxon, Chevron reported really well. There are some parts of the economy that are actually
corporate greed.
Corporate greed, that's right.
Yell that.
That's right.
Corporate greed. Go on, Bobby.
So, but why would they cut rates? Why would they if things are going to be semi-okay? And Jimmy, this leads me, I want to ask Tony respond to that, and then I have to get this question out because it was asked of me. You said in the last podcast that you think we're going to have a non-traditional recession. What does that mean? So go ahead, Tony.
Okay, so I'll just parrot what somebody said to me earlier today. They said bond investors are the worst investors over the last 3 years. Okay, so
small data set, sure.
What's that?
Small data set, right? Relatively speaking.
Yeah, but they haven't performed very well at all over the last 3 years, right? And it's largely bond investors who are looking at that because it affects their bonds. So there is this persistent desire among bond investors to have a recession. That's just baked into the pessimism of being a bond investor, I guess, right? And so, And I think if we look at earnings, or certainly especially those reported over last week, but also when we had the globally systemic banks report a week and a half ago, those were not bad earnings at all, right? And are they telling us that that we're entering a recession? I just don't see it. So I think September, like again, I don't want a recession by September, but I actually don't think there will be a recession by September. I actually think that things are persistently strong, again, because we have that strong nominal GDP growth, okay, with relatively high inflation. But so if we had stagflation, we would have high inflation and a smaller GDP number than inflation, right? So, but it's, I think with where we are now, I don't see us kind of on the precipice going into Q2, going into Q3 and saying, oh gosh, we're going to fall off a cliff, right? I just don't see that. And again, I think part of it is because people saw those government payments as one time or limited time, right? And people have kind of buckled down and said, this is over. We have to figure something else out. And they've just continued to spend.
So Bobby, to answer the question that the viewer asked, and it kind of relates to what Tony just said too about the payments. I think that there's a massive change in our economic condition. I think there was massive wealth transferred from the bottom 60% to the upper 20%. I think those two people still have a shit ton of money. I ride the L, I ride public transportation in Chicago. The amount of people who appear to be living on the fringes has exploded to me. Even when it was going on, I was saying to people, no, you're going to get two $1,400 checks, and I'm going to get massive appreciation in the 4 homes I own and the stock market portfolios I own. This is favoring me, not you. And I think that that's happened in a big, big way. And I think we don't have the tools to calibrate and figure out, we can do Gini coefficients to measure wealth inequality. But I think there's this massive wealth inequality. And I think the government then gets involved and tries to support the lower end, makes it even worse. It's a yoke. It's not a gift. And I think we're in kind of a fucked up way right now in our economic condition. Do either of you guys agree with me on that? Tony?
I don't disagree with you, but when we see things like supercore inflation rising, that tells me that those wages for service workers are rising in a persistent manner. And I don't think that's all bad, right? I think that's helping the folks at Walmart, the folks in the service sector get better wages. And they're not getting it through government regulation. They're getting it through the market working, right? And so employers have realized they have to pay more. It's not some local city government saying you have to pay $20 an hour or whatever. It's the market working. Does it take a long time? It does, and that sucks. But the market is working. People who work at the lower end are getting more money. People who work in the middle are getting more money. And people in the middle of the US who have typically lagged pay rises on the coasts are getting more money now. Okay. And so we're seeing that.
That makes me feel better. Yeah.
Yeah. So markets are working. Again, markets sometimes take a long time to work, right? And especially when it comes to pay.
I do worry that the government is going to see what I have identified, like I'm coming in to fix it. And we all know what happens when they fix it. Bobby, you got another question before we go?
Well, no, I just want to add on to what you guys are talking about here. Because this is what you just said, Jimmy, and what Tony explained just as clearly is why I fear stagflation so much. Why I actually said to the people who pay us, stop paying us for a little while. Because what will happen, in my opinion, yeah, exactly. By the way, if you join,
buy a burger.
If you hire Complete Intelligence, we will not be getting paid for that. So don't worry. There's no discount code here that's coming out after the show. No, but what the government will do to try and fix stagflation is the Fed, ill-advisedly so, fears a recession more than inflation. I think they should fear inflation more because inflation hurts the poor and it's a tax on the poor. And the government, because there'll be an election close by, will send out checks to help people deal with the inflation that's still there while the economy is slowing down, which will just spark an even worse situation. So my fear is that if we get stagflation, not only is stagflation bad in and of itself, But the government's response, and including the Fed in that, will be awful for 2025 and 2026, and for the lower middle class and the poor. It will be hell on earth if they do that in the next 5 or 6 years. They'll crush people. And that's my biggest fear about stagflation, why I hope I'm wrong about it coming.
Well, we see what's happened in Europe with the payment for energy.
So here, both of you, lightning round real quick. Oh, I'm sorry, Tony. I didn't mean to talk over you. I just had one quick question. Was that
He does it all the
have
time.
Stagflation? I do it all the time. Yeah, it's a short guy thing. Can we have stagflation if we don't have high energy prices, Tony?
Yeah, of course. We can have we can have high food prices and have stagflation. So I think having high energy prices would certainly make it easier, but sure, high food prices or high rents or high housing, that sort of thing. I mean, major components. Yeah, absolutely. We could do that.
My answer is very similar. Yes, but it would be a hell of a lot harder with low energy prices.
Well, I just think of the 70s and the cost push and the energy embargoes made it a lot easier. Let's wrap it unless anyone's got something real pressing that's going to set everyone on their ear. You guys good? Thank you so much.
This has been
Tony.
great, guys.
Yeah, it's a lot of fun. I'd love to do a deep dive, particularly get to know you a little bit better. This is awesome. And thanks for plugging your AI. I think that's a really cool thing. Have a great weekend. What are you doing tonight?
Tonight, I'm just resting. It has been a dramatic week. So I'm just going to shut it down tonight.
As a nerd, playing Dungeons and Dragons.
That's right.
I'm going to a figure skating competition that's going to be 3 hours long for my niece. She's not even my daughter. She's not even blood to me. She's my wife's niece. And I'm going to a 3 goddamn hour figure skating competition.
Yeah, you saved yourself by saying you're going for a relative. So that works.
Taking it for the team, Jim.
Exactly.
Dads and uncles everywhere appreciate you.
She's one of my favorite nieces, even though she's not blood to me, but I really like her, so I'm glad to support her.
Great.
I will see you guys. Have a great weekend.
Thank you so much. Thank you.
Thanks, Tony.
Bye.